The Munich Mobility Fair, formerly known as the International Auto Show, opened its doors on Monday. Despite the gathering being held in Bavaria, it has a distinctive Chinese feel to it, as a number of Chinese electric vehicle manufacturers are in Munich, trying to convert being years ahead in development into a sizable slice of European market share.
It's the European premiere of BYD, the electrical vehicle company whose letters stand for Build Your Dreams. Its CLU model is on display. Like Tesla, the Chinese manufacturer is setting the tone. BYD is the world's largest manufacturer of electric cars, and their chances of continued success are good. Proponents say cars from China are cheaper and technically superior to comparable electric cars from Germany or France. So executives arrive in Munich with high expectations and confidence.
Because we know a lot of markets still belongs to the traditional gasoline cars markets. So we try to find more and more friends in this kind of new energy vehicles fields and co-work with them to promote the new energy technologies and also products globally.
Europe's car manufacturers are also going electric, but their transition from combustion engines to batteries will take decades. Hundreds of factories have to be converted, thousands of workers will need retraining, and countless new models will need to be developed. And the billions of euros needed to make the switch are still being earned from gasoline and diesel cars.
I think the competition's increasing, clearly, with the arrival of a lot of new brands, but we equally are a challenger brand with our electric cars, with the Cupra Tavascan, which, by the way, also comes from China. So I think we're in good shape to face the competition.
Meanwhile, German manufacturers are seeking to get a leg up through collaborations. Chinese providers are going all in on electric, while Europeans are betting on various power sources. But in the end, it's the buyers who will decide which car manufacturers have a future and which don't.
For more, let's bring in DW correspondent Kristie Pladson. Kristie, Chinese car makers trying to make quite a splash there in Munich. What exactly is their plan?
Right. Well, what they're here to do, Chris, is to capitalize on the expertise they've honed in their own home market over the last 20 years. Now, China is undoubtedly the farthest along when it comes to developing its EV market. 1 in every 3 cars produced there is electric. They also have a much more developed charging grid there than in Europe and in the United States. So in some ways, here in Europe, legacy car makers like Mercedes, we're standing at right now, they were in some ways just getting their feet wet compared to China when it comes to producing EVs. And Chinese makers are hoping to cut in on some of that market.
So the experience that these manufacturers have made so far on the domestic market in China, that's the reason why they are so confident that they can leave their mark in Europe and grab a solid slice of market share?
Right. Well, as I said, the market in China is much farther along, and it's really interesting when you take a look at these players in China versus the players here in Europe, for example. I mean, here the market is dominated by legacy car makers like Volkswagen, Mercedes, BMW, whereas the Chinese market has been filled by lots of small companies that are maybe only 20 years old sometimes. A lot of the times they got their start as digital companies or as battery companies. So coming from more of a startup approach to tackling the EV problem. So they're hoping to bring this mentality here to quite an old market and to shake things up.
Now, what do German or European car makers, for that matter, have in store to compete with the Chinese?
Right. Well, I mean, these brands like Mercedes, BMW, Volkswagen, they of course have the brand history, the brand identity. They have a customer base that is used to buying those cars. And what we were hearing at the trade fair in the other part of Munich this morning from Volkswagen, for example, is a lot of, we've got this, we're handling this transition to electric vehicles. You can trust us as you've always trusted us. So that's definitely the message we're hearing from these legacy car makers, that they're hoping that their brand recognition and their history will be able to see them through this massive transition.
Nevertheless, you mentioned these legacy car makers. Do they feel threatened by what's coming from China and this big market for electric vehicles there?
Well, what I can tell you, Chris, is I have never heard so many German people speaking Chinese as I have today. We heard it in the Volkswagen speech. I heard it also just on the floor, maybe just little bits of Mandarin that German business people were throwing around. I also spoke with the CEO of Cupra, a Volkswagen brand. He also was saying he's speaking Mandarin and that actually some of Cupra's cars are being produced in China. So what we are seeing here is some attempt at synergy between the Chinese and European markets, maybe learning from each other, but also maybe keeping, in a way, it's keeping your friends close but your enemies closer.
Now, let's take a look at the German car market, where appetite for electric vehicles has been lower in recent months. Why is that?
Right, that's true. I mean, there have been a lot of factors that are weighing down demand. I mean, partly we're still seeing super high inflation here in Europe. That means that people don't have as much money to spend on things like electric vehicles, which are more expensive compared to a traditional car. We've also had issues with supply chain and delivery times from the car makers themselves. So some people just aren't keen on waiting that long for an EV. So these are just some of the factors that are keeping people from jumping into that market just now.
This is the second time that Munich is hosting this fair, which for a long time has been an auto show, and now it is labeled a mobility fair. Does it live up to that?
Right. Well, I can tell you that this is my first time attending this fair, but what I've heard from people that have been to this for several years is that the fair has changed a lot. It's gotten a lot smaller, for one thing, and a few years ago, especially, we started really seeing a lot more bicycle options on show. I definitely saw these around the fair this morning as well. Also a lot about public transportation as well. So there's certainly a transition from the focus on cars alone to a more complex mobility focus here at the fair. That's for sure.
Nevertheless, Kristie, environmental groups have been staging various protests in Munich, claiming that this mobility fair remains too much of a platform for the auto industry. What can you tell us about that?
Right. Well, what I can tell you there is certainly from these protesters a sense that the focus on EVs is misplaced. They're looking for a greater focus, less on private vehicles and more on public transportation. What we're hearing is that there could be a protest tomorrow, maybe even a bridge blocked. But we're also hearing from the people here attending the show that they also say that private electric vehicles are just one part of the solution. They see themselves also offering electric buses, trains, these kinds of things, and it's just one part of a whole package solution to the green transition.
DW correspondent Kristie Pladson reporting from Munich. Kristie, thank you. For more, let's bring in Vince Stamer. He's an expert on international trade policy at the Kiel Institute for the World Economy. Welcome to DW, Vincent. Let's take a quick look back here at our main topic, the car industry. How much is machinery, like Chinese electric vehicles for that matter, a threat to German manufacturers that have made a lot of money selling their products around the world in the past?
Yes, we do observe that the Chinese production has been becoming a competition for German manufacturers of automobiles as well as machinery. We observe, for example, that the important sector of machines has lost competitiveness to China and is exporting less to China than we would expect based on the growth of the two economies.
Exports overall are down month on month, but trade with the United States and China, which are two of Germany's most important trading partners, that trade is up. What do you make of that?
Well, first of all, the data point that you mentioned is monthly trade data. So monthly trade data tends to be somewhat volatile, but there is a growing trend within this data point as well. So German growth, the German export growth has been struggling this entire year. the United States as an import market or as a market for our exports has been somewhat stable. Now, what we do observe quite interestingly is that China as a market for our exports has been declining in importance. So if you look at the data from 2020, China had been importing approximately 8% of all German exports. Now this value is down to from 8 to approximately 6.2% in the first half. So the importance of China as a market for German exports has been declining.
Vincent, high financing costs, biting inflation, slowing growth, and what economists call eroding competitiveness in Germany. How much will international trade be able to contribute to Germany's already sputtering economic engine?
Well, to be honest, this year we do expect that export growth is going to be very small, if not negative. But in the years to come, growth will still come from exports. Do keep in mind that economies around the world are growing somewhat faster than Germany. Take China, for example. Yes, the Chinese economy is struggling and there is competition, but the Chinese economies in Southeast Asia are growing fast. And this will contribute to German export growth in the years to come. There will be some negative news in the next months, next quarters perhaps, but in the long term, there will again be some impetus for German export growth.
Vincent, briefly, if you could, if you look at the immediate situation, what could be a signal for a turnaround, a stop of rate increases in the United States, for example?
Yes, absolutely. So interest rates play a major role because what Germans tend to export are machines, which are capital goods. They have to be invested. So high interest rates tend to hurt these German export machines, for example. So a turnaround in the interest rates, as you said, would help German exports.
Vincent Stamer of the Kiel Institute for the World Economy. Vincent, as always, thank you.
You're welcome.